Hi and welcome back to my channel. In this video I'm going to talk about Etoro's risk score. I'll explain what is the Etoro risk score, then I'll explain how is the Etoro risk score calculated, and I'll also explain how to reduce your risk score on Etoro. If there's a specific part you want to jump to, then the timestamps are in the comments below. If you're new here, then my name's Ollie, and on this channel we talk about all things related to personal finance and investing. So if you enjoy this video, then I'd really appreciate an early thumbs up, as it really helps with the YouTube algorithm so that my content can reach more people. Also, please subscribe and press the bell icon to be notified of the latest videos, as I upload new content every week. Please note the information in this video is not intended to be financial advice, and if you want financial advice, you should seek a licensed professional, because at the end of the day, I am just a guy on YouTube, so what do I know? So please do your own research. Also, past performance is not indicative of any future results. If you're not already signed up to Etoro and decided to sign up while watching this video, then I have an affiliate link down below this video, which if you sign up using it, then I will get a kickback, and it doesn't cost you anything extra, but it really helps support this channel. But I'm sure if you're watching this video about Etoro risk scores, then you're probably already signed up. So what is the Etoro risk score? So when using Etoro, you may have noticed how every user profile has one of these numbers assigned to them, and this enables you to know how risky a trader is on the platform, and essentially measures your market exposure and is based on the likelihood of wiping out the account. So this is a numeric value that ranges from 0 to 10. 10 being extremely high risk and 0 being extremely low risk. I don't think I've actually ever seen someone with a risk score of 0 though. If you have, then let us know in the comments below, but saying that, I presume maybe when you start your account you probably are starting at 0, and then when you start investing in things it probably goes up. So there is a thorough calculation behind this, but as a rough guide, according to Etoro, 1 to 3 is considered low risk, 4 to 6 is medium risk, and 7 to 10 is high risk. So how is the risk score calculated? So the Etoro risk score for each trader is calculated daily, and the risk score is calculated using an algorithm that combines various factors. So the algorithm considers the following: the volatility of each instrument in that person's portfolio. So this is how up and down each asset goes in a person's portfolio. So every instrument has an average daily movement, which indicates its volatility. For example, let's say the market price of instrument X shifts on average around 2% a day. For example, during a given day, it will usually go up or down by around 2% from its price at the beginning of the day. This is basically its daily standard deviation, which is one of the key fundamental risk measures that analysts and wealth management advisors use. So the next factor that affects the risk score is the percentage of equity being invested in open positions. An investor putting a substantial amount of their equity in a single instrument or one asset class is considered a higher risk than a more diversified investor. So this obviously means the less diverse portfolio you have, the more at risk you are. For example, if you just filled your portfolio with one trade in Bitcoin, well, then you're 100% exposed to the price movement of Bitcoin. So if Bitcoin goes down, your portfolio value is definitely going down also. But if you had assets such as stocks or FX, then if the price of Bitcoin decides to slide, then hopefully you'll be protected by the other assets. Interestingly, it is also based on the diversification of stocks and the industry these stocks are in. So if you're heavily invested in tech stocks, then perhaps you want to invest in some services or financial stocks also. And in relation to the first statement being the percentage of equity being invested in open positions, then it's saying you want to have money on the sidelines available for later. So the next factor that affects the calc is the direction of each position. So if all of the positions in a portfolio are correlated with one another, the portfolio will be considered riskier than a portfolio that has a combination of short sell positions and long buy positions for the same asset. So this is saying if you have 3 positions, one being GBP USD, another being Euro USD, and another being New Zealand dollar USD, and these are all long, then you are overexposed to the dollar, which would bring up your risk score. And the final factor that affects the calc is the leverage used. Higher leverage means more exposure in the position, leading to more volatility, and therefore more risk. If you don't know what leverage is, then I recommend you check out my video, which I'll put a link to up here and in the description below. But higher leverage means it's a lot easier to wipe out your position because basically you're increasing your exposure in the market. And Etoro calculates this based on a unit size. So say for example, you had a euro to US dollar position for $500 US at 5 times leverage. This would essentially give you 2,500 units. And alternatively, if you thought you would instead reduce this to invest $25, but with 100 times leverage, then your exposure and risk is still the same because technically you still have 2,500 units. So one factor that interestingly doesn't affect the risk score is actually the stop loss. So how do you reduce your risk score? So one way to do this is to diversify. If, for example, you have loads of FX trades open, then perhaps you want to open some stocks or ETF positions also. Or like I mentioned before, if you're all in on tech stocks, then perhaps broaden your investments to different industries such as financial or service industries. Another way to bring down your risk score is to hedge. So avoid having too much of your equity tied up in a single market that is in one direction at any one time. If you have a lot of FX trades with euro in and you want to hedge with dollar, you could get some US stocks, for example. And another way to bring down your risk score is to reduce the amount of leverage you're using. And another way to bring down your risk score is to free up some money. So just having money available in your account will bring down your risk score. And if you're not a popular investor and you want to reduce your risk score, you could even copy another trader who is getting it right. So if you add someone with a lower risk score to your portfolio, it should bring down your risk score also. And for those of you who are currently popular investors or thinking about being one in the future, then you must maintain a maximum risk score of 7 or less for 2 full months. So it's good to see that Etoro are proactive in that they are trying to protect investors on their platform. And the first time a popular investor reaches a risk score of 8 to 10, they are actually blocked from being copied for 2 full months and they will not receive a payment. Which is kind of good because say someone goes off the rails and they've lost a lot of money, they could be trying to double down and win all their money back, which is technically gambling. So I think it's good that Etoro protects people with this. And a second offence will also result in a longer blocking period and potentially removal from the program. Plus, Etoro also reserves the right to reject or remove a popular investor if they feel they are taking unnecessary risks, which I think is great because it sounds like it's in the interests of the copiers. So that's it for this short video. I hope you found it helpful, and if you got any value from it, then please smash the like button as it really helps support the channel massively. If you're copying traders on Etoro, then what's the maximum risk score you will go for? Let us know in the comments below. Or let us know your thoughts on whether you like or dislike Etoro's risk score. Maybe you find it limits you too much. Also, if you want to learn more about personal finance or investing, I recommend you subscribe and press the bell icon so you don't miss out on any future updates, as I upload new content every week. It's been Ollie from Get Geek Finance. Thanks for watching, and I'll catch you in the next one.